I'm Keith Ashworth-Lord and I manage the Combrio Sanford de Land UK Buffetology Fund. I'm looking for a business that's got decent growth prospects, an enduring franchise with walls, drawbridges, moats infested with sharks and things around it, and looking for pricing power, that type of thing. Then I regard true profitability as being return on capital or return on equity. So I'm looking for what sort of average and marginal returns are being made on the capital invested in the company. And last of all, because I only regard returns as real if they come out in cash, I'm very, very strong on seeing that earnings are converted into free cash flow. 2014 to date, I haven't added a single new company to that portfolio. You know, for example, this year I've looked at the Pets at Home IPO, I looked at Telecom Plus as another situation I've known for many years, but I just couldn't get them at the price that made business sense to me. So the approach this year, I've let the cash build up a little bit. I mean, we've got about 10% cash in the fund at the moment, so plenty of firepower if the market has a bit of a wobble. And all I've done really is look at my existing holdings, and where there's been an event, an extraneous event, that's caused the share price to come under great pressure, I've basically backed the truck up and just topped up the holdings, you know, well, more than topped them up. I mean, really sort of hit them heavily in some cases. I don't tend to have favourite stocks as such in my portfolio, but I could certainly point you to a couple of companies that I really think tick all the boxes. The first company would be Rotork. Rotork manufactures actuators that open and close valves. It's very international, it's across all continents. Its three areas are power and power generation, oil and gas, water and wastewater. It's got a real royal flush of cards in its hand to play. Very, very strong franchise, good management. And the other business is NCC Group. There are two real sides to that business. One is the escrow division, where they take your software codes and they store them for you for disaster recovery. And where's the barrier to entry? Well, it's simple. Apple and Microsoft and people like that trust these people. They've been doing it for so many years. The other side of the business is cyber security. They go out and they secure clients' exposure to the internet. In other words, their interaction with it, their computing systems, etc. And they're about to launch secure domains whereby you trust them with all your internet security, and you put it behind either .trust or .secure or some name like that. And potentially, this is just starting to roll out, potentially it could be an almost game-changing business for NCC Group. Tesco's I did sell out in December, you're quite right, and the reason was I hadn't held them for very long. The first trading statement that came out absolutely blew my thesis to smithereens. It was quite clear that margins were under pressure and were going to come under much more pressure because of the success of the discounters like Lidl and Aldi. It was perfectly clear to me that the business was going to require more capital in it than I'd been bargaining for. I just thought, Keith, you've got this one wrong, mate. Time to sell. I think it's too soon to judge the change of management and what effect it might have. I mean, you know, coming from Unilever, you have a pretty good track record, I'll grant that. But I think my biggest worry about Tesco's at the moment is that it could turn out to be a classic value trap, that things carry on getting worse. And even if they don't, they have to run very hard just to stand still. I know when the market is getting a little bit hot because I'm finding it hard to find value within the market. And it's always been the case that when I get to that position, I'm always better to let a little bit of cash build up and just wait for something to happen. For what it's worth, my own view is I think we could have a correction. I think we could have a 10% correction. If it does, I'm going to be very well placed to buy some things. I've got quite a lot of things on my radar. An investor attempting to make money from the stock market, I would advise to put some money in the Buffetology fund. And if he can't do that, I would advise him to switch off stock markets and switch on to companies. In other words, let the company fundamentals be your guide, not trying to forecast the psychology of the market.